3 interest rate drops. Will we see a fourth, maybe? Joining me at the desk from a specialist finance group is Blake Buchanan. How are you, Blake?
Morning, Tim. Morning, all.
Those inflation numbers during the week, they're not the absolute accurate ones that we get on a larger span. What did you make of it?
Oh, listen, I mean, when confidence goes up, spending goes up. When spending goes up, inflation goes up. The interest rate reduction was widely anticipated, and so some people are getting their wallets out and spending a little bit more. We're also seeing rents creep up a little bit at the moment as well, which is adding to those inflationary pressures.
Do you reckon it'll stop another cut, or do you reckon it's going off too early?
I think what we've seen from the RBA has been conservatism. They've been very slow. We saw that they failed to move a couple of months ago. The unemployment jumped a little bit. I think they're going to pause and wait for the real data next week. We've got another meeting on the 29th and 30th of September, so a month away from today, and we'll see what they do.
Yeah, we'll watch with interest. Now, soaring property prices have pushed that forever home out of reach for a lot of people.
Yeah, Tim, we've got $11 trillion plus in properties in Australia. The average tenure of a home is actually around 11 or 12 years, and for a unit, it's around 8 or 9 years. So the notion of a forever home isn't quite real unless you're buying it when you're quite aged. And so people are changing homes 5, 6, 7 times throughout their lifetimes. What is apparent is we've got stocks that are about 20% lower in August than what they have been historically. So there's not many properties to buy at the moment.
It's the way people make money too, isn't it? Because you're not paying tax on the house you live in.
Well, moving from a small home to the next forever home and keeping that, having your family there, those days are largely gone as properties transact sooner. But what we are seeing is with that low stock levels, people are obviously holding on to their properties a little bit longer.
Now, it's been a dormant market, if I can use that word, for a while, Melbourne, but housing confidence has returned and returning ahead of the spring, which is this week, basically.
They've got some political issues down there, and people are still tempered with their appetite for Melbourne properties, particularly in the investor space with their land taxes. It has rebounded a bit. We've come up to about 1.5% to 2% in annual growth, which is looking good for Melbourne, but it's certainly a far cry away from where it was years ago in growth.
Because it was at one point side by side with Sydney, wasn't it, Melbourne? It was what happened in Sydney happened in Melbourne, what happened in Melbourne happened in Sydney, but they're now battling more with Brisbane than Sydney.
Yeah, absolutely. If we look around the capital cities, for the most recent data that we've got access to, the capital cities outside of Melbourne and Sydney were really performing at above 6%. Melbourne and Sydney around that 1% to 2%. So we're not performing as well. We can see with the new government schemes as well, a property in Melbourne, the scheme goes up to 900,000 now, whereas in Sydney it's 1.5 million. So you're absolutely correct. The Sydney market has far outpaced the Melbourne market.
How important do you think it is for the state government or state governments around the country to continue to push councils to get DAs through? Because that's part of a problem, an ever getting bigger problem for lots of people that want to build.
Oh, Tim, bureaucracy is crazy at the moment, particularly when it's so hard to build. Let me tell you what the Productivity Commission came out with recently. So in most sectors, productivity in the last 30 years has improved by 48%. So we're 48% more productive than what we were 30 years ago. Whereas in construction, we're 12% less productive than what we were 30 years ago. And it's largely due to the burden of red tape and bureaucracy. So we've got 220,000 homes currently being built. We're completing about 13 to 15,000 per month. That needs to be 25,000. We've got 30,000 sitting there approved, waiting to get started. The problem's not with the approvals, it's with the available land, it's with the available builders and the cost of doing so.
And it's hard on builders. They're one sector that really copped it during COVID and have still not recovered completely.
And really, we've done nothing about that. You know, the pricing, when you're purchasing or constructing a normal home, you're paying up to 45, 46% in taxes in some cases. And why is that, Tim? We really have to look at, well, in troubled times, let's make it easier to construct. We do have a supply-demand issue here, and all these factors are keeping prices really lofty and otherwise first home buyers out of the market, which is a sad thing.
All right, now the weather is turning. Some bright news to finish with. What are you expecting for the spring? It's traditionally the 3 months, isn't it?
Yes, well, that's the selling markets, and we're already starting to see green shoots in the auction markets. Like I said, we've got less stock on, but the clearance rates are creeping up. So it's going to be an exciting spring market. Albo's just thrown a bit of fuel on the fire with these new 95% acquisition plans for first home buyers, which will be interesting to see. I don't know if you needed to do it in October, maybe January next year would have been a better time, but it's certainly looking to be green shoots in the property market, Tim.
All right, springtime. I love spring. Good on you, Blake.
Thanks,
Great
Tim.
to see you.
Likewise.
As always.